Hey everyone, in this video we're taking an in-depth look at what's happening in the real estate market. We're going to take a look at all things happening here today, as well as what the market predicts for 2024. But this is going to be a long video. We're going to cover a lot here in this video today. We're going to talk about what interest rates are doing right now and where they might possibly go over the next few months and into 2024. We're also going to take a look at what's happening with market predictions, what different companies are predicting will happen to sales and to prices. We're going to take a look at different numbers such as cash purchases versus traditional purchases with financing, and we're also going to look at some off-market opportunities. We're also going to be taking a look at inventory numbers, what's happening with real estate agents across the board. We're going to touch on every single market here in the Wasatch Front. We're also going to take a look at every county across the board. We're going to take a look at Davis County, Salt Lake County, Utah County. We'll take a look at Park City, and we're also going to take a look at what's happening in southern Utah. We'll talk about different price ranges and different home types. So this video is going to be a long one. We're going to cover a lot of information here today. If you're interested in all of these topics, feel free to watch it from start to finish. If you want to jump around, there will be some chapters in the timeline down below. If you just hover your mouse or click on that, you should be able to see the different chapters so you can jump ahead to which section you care most about. But we're going to cover a lot here. We're going to start off with talking about interest rates, then we'll talk about where the market's headed, and then we'll jump into some market stats and actually show what's happening right now, as well as where the market's going in the future. So with that being said, we're going to jump on my screen here and let's jump in. Hey everyone, it's Cody. As we jump in and start talking about interest rates here, I needed to mention that when I first initially filmed this video, this was about 10 days ago as of today when I'm filming this new updated version. Because we had some major news over the last couple of days, I wanted to jump in here and give you an update on this video. So you're going to see me here in a different shirt. We're going to talk about a little bit of different information here because this is going to change what I actually talk about here in the video. So you'll see some edits with me wearing this lighter color shirt that are relevant to today. The rest of the information is still going to be the same regardless of when we actually filmed it. But what I wanted to point out here on the mortgage rates is how they drastically changed. So when I first initially recorded this video, let me see if I can zoom in here a little bit. We actually recorded this video back here. It was actually, I think, on December 6th. So December 6th, we were at 7% on the interest rate. And I was talking about, hey, here's where rates are today and here's what we could potentially see. If we zoom out just a little bit, you can see this massive drop off a cliff from about 7.10% or 7.1%, let's say, all the way down to about 6.6%. So interest rates dropped over 0.5% right here on December 14th from the 13th to the 14th. And then as of today on the 15th, I'm filming this on Friday, they're at 6.64%. So interest rates have dropped over 0.5%, which changes things massively. In the prior video, I talked about how interest rates might come down, maybe another 0.25% to 0.5%, maybe a full percent over the next 6 to 12 months. But that has already happened in just the last couple of days. So this is going to change a couple of things I want to point out here. But with this being mentioned, now we have to talk about how interest rates have changed and what this could do to buyer demand. Now that we've had some cuts in interest rates across the board, we could see more buyers jumping into the market. If we zoom out here a little bit and take a look at the graph, let me see if I can get this zoomed in here. The last time we were at 6.5% was all the way back here, basically like in May, right? We're so back here in May, we're at 6.7%. We have not had a lower 30-year fixed rate since that time. So I could actually see that we're going to see a lot of buyers jump into the market despite being in the low time of winter seasonality. December and January are usually the slowest months for real estate. I think this could actually change things quite drastically, and we could see a huge increase in the number of buyers jumping into the market, because even though now today 6.5% is going to be kind of the new norm, it still seems like a bargain compared to what we've seen over the last 6 months or so. And as people adjust to this new normal, now they start to get used to, start seeing 7.5%, 8% interest rates. So now looking at 6.5%, maybe even lower than that, looks like a steal of a deal. I'm starting to see more and more incentives come out from builders and from even home sellers who are saying, hey, we're going to buy down your interest rate and we can even get you lower than that today. I actually saw an email come through from Mountain America who said, hey, we are offering a 30-year fixed rate mortgage on owner occupied homes for 6.125%. And this can be bought down further. What that basically means is that the seller or the buyer could potentially pay extra interest up front and be able to lock in a lower interest rate for the long term. So you could actually get an interest rate under 6% right now today if you're a well-qualified borrower. I also saw from a new construction builder that they were offering 4.99% on FHA mortgages for some of their inventory homes. So you can get interest rates in the 5% range, maybe even in the very, very high 4% range with one of these new construction builders. So these rates are dropping. What does that mean as we go into this next year? Well, it's going to change things up, right? Next year is an election year. Inflation has been coming down, and they're actually expecting, the federal government has basically said, hey, we anticipate that we could see upwards of 3 rate cuts next year. Now, for home buyers and for, anybody who's borrowing money, that is fantastic news. However, I think we got to be a little bit careful about this, because if we start cutting rates right now, that could actually cause inflation to come roaring back, right? That could cause the market to go crazy for housing. That could cause car loans to go crazy. crazy again. That could cause just general business and the economy to go crazy again. And then all of a sudden we start seeing inflation again and things are back to the races, back to exactly what we saw over the last 18 months. So it's kind of a slippery slope. Yes, it's good for home buyers. Yes, it's good for people borrowing money. For me, I'm kind of in this position where I'm like, yeah, that'd be good for my business, but it's also going to be potentially bad for the rest of the economy if we cut rates too soon. So in my opinion, I think that rates will probably stay around 6.5% to maybe 6% over the next couple of months. Going into the next year, maybe even we get down to like 5.5% based on this graph here. If we get any lower than that, I'd be extremely surprised. But again, at the same time, I would not be surprised to see interest rates climb back up to 7% in the next couple of months as well, just depending on how things go. So if you're a buyer in this market, this could actually be opening up a very good opportunity for you. So let's jump into talking about what's happening with the housing market outlook for 2024, right? So we talked about what's happening with rates here. Let's actually talk about where the market is headed and what we can kind of expect over the next year, right? So I've highlighted some things here on a couple of different articles that I want to talk about here. So mortgage rates are declining and home prices are dipping. Borrowing costs will fall somewhat as easing labor and inflation data prompt the Federal Reserve to turn dovish, right? Which means they're going to get less aggressive on their interest rate hikes. And that's after the 30-year mortgage rate soared this year, briefly breaching 8% in October. While some see a drop as low as 5%, Realtor.com sees an average of 6.8% compared to 7.22% in Freddie Mac's latest survey. So these guys are kind of in line saying, hey, we think interest rates are going to hover around the 7%. Realtor.com, some others, it doesn't mention who it is, will see a drop as low as 5%. I think that's pretty optimistic. I don't think that we'll get down to 5%, maybe into the high fives if things go very, very well. But that's just kind of my personal opinion. Still, this will be enough to take pressure off buyers who won't feel rushed to buy before rates rise further. Demand should slow with home prices dropping 1.7%. Coming down here, I noted this because I think this is really important. To afford a home, Americans must now make a record $114,627 a year, an October report estimated. This is a little bit interesting. They put this information in there because I don't know that I fully agree with this. Yes, I mean, how do they come up with this information? They do have the report linked right here. We're not going to dive into that. But I think that one thing that I just want to mention as a brief note is that, hey, you could have, if you've got $500,000 and you go purchase a home and you have a job making $50,000, you can still afford that home, right? You don't have to be making this number. So they're probably going to say, oh, if you want to put 5% down and your interest rate is this and your insurance is this, that's what you need to make to afford a home. But that's just not the reality, right? Every single person is in a different situation. Some people make a lot. Some people don't make a lot. Some people have a good down payment. Some people don't have a good down payment. Some people are going to go FHA, VA, conventional loan. There's so many different factors here that to have, to come up with a number like that is a little bit difficult. I don't know that I fully agree with that, because everybody's situation is going to be different, and so just going based off of this one number is not always a fair analysis of what's happening with the market. This article continues with lackluster supply and rental upsides. We're going to jump over here to a article here that is specific to Utah and Idaho, actually. So U.S. home prices will rise 6.5% from July 2023 to July 2024. We're going to talk about that here in just a minute. We're going to jump into some market stats on what I'm personally seeing directly from the MLS, and we're going to talk about how home prices have changed, at least from July of this year through the end of the year. So we'll come back to that. They're predicting that prices will actually rise 6.5%. I think since this time they've been mostly flat, actually. So if they do rise, that's going to come in the first half of 2024. So the thing I want to point out with this article here is that really, honestly, nobody really knows where the market is headed, to be totally honest. In their latest forecast, Zillow housing economists have revised their estimates to be even more optimistic heading into 2024. They are predicting that U.S. home prices will rise 6.5% from 2023 to 2024, like we just talked about, and that's up from their 6.3% prediction last month. If we scroll down here a little bit further, however, firms including Moody's Analytics and Morgan Stanley have a more bearish outlook, predicting home prices could dip again sometime between now and the end of 2024. So this is not exactly the same timeline as what Zillow predicted, but we've got other major firms or outlets that are saying, hey, we actually think that home prices could dip, right? So Zillow's saying, oh yeah, they're going up. These other guys are saying, no, yeah, they're going down. Nobody really knows, right? Nobody really knows what's going to happen. There's so many factors that come into play, such as what's happening with the economy, what's happening globally, right, with the wars or with just global economics. There's so much that happens with interest rates, prices. It totally depends on the market, right? If you're looking across the board, every single market's going to be a little bit different. Some markets may go up. Some markets may go down. Some are going to have very drastic increases and others will have very drastic decreases. So there's a lot of factors across the board and you can't just solely rely on one source. You kind of have to take all this information, including what I'm giving to you here in this video, and break it down into a easy to understand way where you can kind of come up with your own analysis on what's happening with the the market. And ultimately, if you're watching this video, you're probably in a position where you're thinking about buying, selling, or investing in real estate. And that actually leads me to a very good point. As always, guys, if you're looking to do that and you want some help through that process, I'd love to chat with you. I've had hundreds of people reach out to me through these videos that I make here on this channel, and they ask me, hey, Cody, I'm looking to buy, I'm looking to sell, or I'm looking to invest or relocate to your area. Please help me. What do I need to know? Can I get some guidance along the way? And I absolutely love it. I love when you guys reach out to me, and I cannot wait to hear from you. So if you're in a position where you're looking to buy, sell, or invest in real estate, maybe relocating here to the area, looking for a second home, whatever it may be, please reach out to me. My information's here on the screen. You can call, text, or email me anytime. I love hearing from you guys. So let's jump in and continue with the video. If we scroll down here a little bit on this article, for the state of Utah, where they're predicting that home prices will actually go up, Salt Lake City was the most, right? They're saying that, or not the most, but rather is first here on the list. They're saying that it's going to go up 6.4% between July of this year and July of next year. Ogden Clearfield area will go up 7.4%, which I think is probably pretty accurate. This area has been considered to be a little bit cheaper across the board. So I think seeing a higher percentage increase in these areas is, logical, makes sense. Provo-Orem will go up 5.8%, and Logan will go up 7.7%. Again, Logan is kind of a smaller area on the northern end of town, northern end of the state, and I do think that there's a good chance that we could see prices jump up substantially there. There's lots of people that love living in Logan, and there's honestly not a lot of housing supply either. I thought this was interesting too, that Idaho is also on this list, they're on this list, but just look at these numbers, right? Boise up 6.4%, Twin Falls 8.8%, Pocatello 9%, Idaho Falls 7.6%. These forecasts come as areas in the West, including Utah and Idaho, have seen some of the most dramatic home price corrections amid rising mortgage interest rates. So they're saying that, hey, even though interest rates have caused a huge correction over the last roughly 12 months or so, now they're expecting those prices to rebound, which is kind of crazy, to see a huge drop, and then now they're going to rebound and keep going up. Very, very interesting to see. So that wraps up that article there. I just want to touch on one thing right here. This article right here, the median sales price for an existing home in the U.S. was a hefty $394,000 as of September 2023. This is the third month of the year-over-year price increases in a row. As of early November, the average 30-year mortgage rate was 7.69%, thankfully no longer above 8%, but still hovering around 20-year highs. So they're saying as of early November, we are at 7.69%, which is true. If we come back here, you can see the date here kind of down towards the bottom of the screen. Early November, yeah, we were like 7.5% roughly, and now we're down to 7%. So even in just a month, the market can change drastically, right? That 0.5% interest rate can make a huge difference on your overall payment and what you can afford in a home. To show what I mean by that, I actually want to pull you over here to a mortgage calculator that I just pulled up. Let's assume that you're paying or you're borrowing $500,000, right? That's your loan amount. So maybe your purchase price is going to be higher than that, but taking a look at loan amount is $500,000. If we come in here and we put, let's do 7.5%, your payment would be roughly $3,500 a month. This is not including taxes or fees. Ruled that out for this presentation right here. If we go ahead and change this to 7% interest rate, that drops your payment $3,327. So that's almost, let's say $175 a month just from that 0.5% interest rate. Now, if we actually change this and go to 520, we can probably go to 525. This is to get the same payment as what you had at 7.5% interest rate. So if the interest rate comes down a 0.5 percentage point, you can now afford to borrow $25,000 extra and still end up with the same mortgage payment. So if interest rates come down 0.5%, that makes a huge change. If they come down a full percent, that makes an even bigger change, right? If we come down here to 6.5% and change this to probably like 555, we're 3508, right? So you can probably go to like 554 and still get that same $3,500 payment within a couple dollars or so. So you can see how interest rates make a huge change on what people are able to afford. So if interest rates come down, theoretically, that's going to increase the borrowing power for a lot of people. Now, that being said, interest rates and what's happening with borrowing is not the entire picture of what's happening in the real estate market. There's still a large portion of people who are paying cash for properties. Let's take a look at what's happening with that. If we come over here and take a look at our market stats, you can see this is directly from the MLS. This includes all areas, all home types, right? So search criteria, right now we're just looking simply at the state of Utah. So this includes the entire state. Anything that's listed here on the market is going to show up here on this data set. So if we look at here, we had 2,295 home sales in November of 2023. So just last month, 2295. Now let's actually go back here and modify this search. We're going to pull up the terms, and we're going to change the term to cash purchases. Let's actually take a look at how many cash purchases happened over the last month. So in November of 2023, we had 2,295 home sales happen across the market. So let's just call it 2,300 home sales. Now, if we come over here, we're going to go down here to the sold info. We're going to choose the number of homes that sold via cash, and let's click view results and see how many home sales we had during this time. So we had 532 home sales sales that happened via cash during this market. So 532 divided by 2,300 gives us roughly 23% of home sales that happened with cash. So yes, although most people are financing their home purchase, 23% roughly are purchasing with cash. You can see the numbers a little bit higher if we go back even a couple months before that, 23% with cash. And I think the number is even higher, right? If we come in here and look at different price ranges, let's just choose a price range of a maximum of 500,000. You can see here we're at 252, which makes up a bulk of it, the bulk of the purchases. Come in here, let's do 500 to a million. 500 to a million, we had 187 home sales, and then above, let's do a million plus and see what happens. Kind of more so in the luxury market. In the luxury market, we had 97 home sales that happened with cash in above $1 million, right? So 97 home sales. Let's actually take the cash out. What I want to do here is see how many home sales did happen above that that number. So we're going to pull up our calculator here. We had 217 home sales in November, right? So there's 97 cash purchases in November above $1 million, and there was 217 total purchases. So it depends on the price range, but you can see right here, above $1 million, roughly 44% of those homes are selling for cash, right? So the market is in a very interesting place. Yes, you're going to hear the headlines. You're going to hear that people are struggling. You're going to hear that people are in very dire straits. The market is struggling. It's so expensive. The housing market sucks. And yes, that is true. But the reality is that the market and the economy overall is still very strong for a lot of people. I work with lots of buyers, lots of sellers who are in very strong financial positions. And I don't say that, to kind of tear a divide and, choose a side of what, saying, hey, the market's in a rough spot or the market's in a great spot. I'm just simply stating the fact that I've talked to lots of people like you who are watching this video right now, who are still in very good positions, right? They've got high paying jobs, or they've got assets, or they've got cash, and they're able to purchase homes with cash, or they're selling homes with cash and then buying something else, right? So there's a whole spectrum of people out there who are trying to purchase or sell in this market, maybe even invest in this market. And, you can't always just read the headlines. You can't always just look at what's happening in the news to get a full assessment of the overall market. So I just want to point that out here. Taking a look at cash purchases is very important in my opinion. Over 44% of purchases above $1 million are happening with cash, which means there's a lot of people out there who, have the cash to do so. All right, so let's take a look at actually what's happening with the stock market. This is something that you might consider is unrelated to what's happening with the overall real estate market, but I think this actually parlays into why we see so many cash purchases, as well as why we're seeing such a strong demand in the real estate market itself, right? Typically, other than maybe first-time home buyers, people who are purchasing homes typically have money invested either through a retirement account or their own personal investment accounts in the real estate, in the stock market. If the stock market is in a position where it's doing very, very well, there's actually a good percentage of people who are going to feel confident about where the economy is headed, right? If the stock market's doing well, if their portfolios are doing well, then they have confidence. They say, okay, maybe, it's a little bit of a stretch to go out there and purchase this home or finance a home, but because my stock market portfolio is doing well, my retirement's doing well, I feel confident that I'm in a good financial position and I'm going to proceed through that process. So keeping an eye on what's happening with the stock market is very important for getting an understanding of where the economy is going and also the strength of the real estate market. I'm not saying these two always are, move side by side, but it's also a good indicator of what's happening out there. So if we come back here to the end of 2022, the NASDAQ, which is a good indicator of what's happening in the market, you can see right here, if you don't know what the NASDAQ is, it's a stock market index that includes almost all stocks listed on the stock exchange, along with the Dow Jones Industrial Average and the S&P 500 as one of the three most followed stock market indices in the United States. So if taking a look at this, the NASDAQ was down here at roughly, low 10,000 range. And as of today, we're sitting at roughly 14,300. So you can see this pretty steady climb. If these numbers don't make any sense to you, don't worry. It's not important. The important thing here is to know that this number has climbed, through this summer months. It was really strong. It actually dipped right here as interest rates were climbing. So this is very interesting. People were thinking the economy was in a very tough spot, which honestly it was. There was a lot of uncertainty with what's happening in the market. And that's why we saw this drop, right? We were at 14,000 here in August, and then we fell all the way to about 12,500, again, in correlation with interest rates rising. So as interest rates went up, the NASDAQ went down, which is kind of to be expected. Let's jump over here and take a look at the S&P 500. If you understand these numbers, you know what these mean, then this is going to be relevant information for you. You kind of understand the dynamics dynamics of how these things work and how they correlate. Again, going back to the end of 2022, we saw that the S&P 500, which represents the 500 biggest companies in America, the 500 largest companies, we were at roughly, 3,900 here at the end of the year, climbed up to about 4,000, back down to 3,800, and then had a really strong first half of the year going up to about 4,500. Again, fell just like we saw with the NASDAQ, and then climbed back up, and we're sitting roughly 4,500, almost 4,600 as of today. So the S&P 500 is doing very, very well, and this gives people confidence that what's happening in the real estate market is going to continue, right? This is going to be a very strong market, and it gives people the confidence to continue to go out there and purchase homes. I even see, again, like I mentioned, a lot of people who are pulling cash out of the out of the stock market and going to purchase homes in the real estate market. So there's people out there who have very strong portfolios. They're going to say, hey, I'm going to liquidate what I have in bonds or in the stock market. I'm going to use that money to purchase cash to buy a second home, or to buy my first home, or to buy, my next home, whatever it may be. And people are able to do that because they're sitting on lots of money due to the strength of the stock market overall. So this is very important to watch if you're interested in where the market's headed. It's also good to keep an eye on what's happening with the stock market overall. All right, now we've covered a lot so far in this video. If you're still with me here, thank you so much for watching these videos. Make sure to subscribe to the channel if you like this information, you like what's going on with the real estate market here in Utah, or you want to learn more about what it's like to live here. I do a lot of videos talking and showing you what's happening and what it's like to actually live here. We get out on the streets, we show you around the neighborhoods, we show you what the sidewalks look like, the trees, the houses, all of that information. So if you're interested in those types of videos, you can find them here in my channel, but you'll also want to subscribe to the channel to make sure you get updated on those future videos when they do come out. Also, just a quick reminder, if you're looking to buy, sell, or invest in real estate, please reach out to me. My information is here on the screen again, and you can find it in the description box down below. All right, so with that said, let's go over here. We're going to start taking a look at some market stats here. I'm going to go ahead and get rid of these different things right here. We're going to just X all these out. And actually, we want to keep the one for the interest rates. We might come back to that. So for the real estate market here in Utah, I want to actually point out some different statistics that show the strength of what's happening between different markets, right? So if we come in here in the list price, we're going to put a maximum list price of $500,000, because what I'm seeing right now in the market, home prices under $500,000 are still very resilient. We're starting to see kind of a divide in the market. Anything under $500,000 is still selling very quickly, and it's selling for pretty close to the asking price overall across the board, right? So September 2023, we're going to look over the last, roughly 2 to 3 months for most of this data set. Let's actually even go back a little bit further. We'll take a look at the whole year for the sake of this. So January 2023, we had a median original list price of, you can see that right here, of $410,000 with a sales price of $386,000, which means that on average, or at least on a median basis, homes were selling for roughly 6% below the list price. This is in January. This is kind of when we hit a low here. In February, it climbed up just 1%, and then by March, we were kind of back in full swing in the the thick of the spring rush for the real estate market. 98%, 98%, 99%. You can see these numbers right here, and you can see how they mostly stayed flat. Now, of course, we are putting a top end number on it of 500,000, so these numbers are not going to fluctuate a whole lot, but you can see that basically since January, we've been right around this 400,000 mark. We did dip slightly here in the summer months, which is interesting to see, but we're at 410, 410, 400, 410, 405, 404, 400, 400, 400, 410, 410, 415 here in December so far. But the important thing that I want you to look at is how much homes are selling for based on what they're actually listed for. So there is still some negotiation going on in these price ranges. We're starting to see 99%, basically 1% off of the listing price. The last 2 months have been a little bit lower, 2% off here in October, and then 3% in November. Days on market has also still been very strong, hovering roughly around 3 to 4 weeks over the past couple of months. So under 500,000, the market is still very strong. Let's take a look at what's happening in the luxury market, and then we'll come back and take a look at what's happening between 500,000 and $1 million, because I think this information is really going to surprise you. Over $1 million, if the list price is at least $1 million, over the past year, we've seen some very interesting changes. January, we had 89% median sales price to original listing price. We climbed up 91%, 92, 94. Of course, this correlates with the spring rush, just like we saw in the other price range. So if you're a buyer in this market, I would almost say always looking during the winter months is going to be the best option for you. Going back to 2021, this is even before interest rates started going crazy. December 2021 and January, we were at 97% and 94%. So historically, December is actually one of the best months to be looking for a home, because anybody who's selling a home during the month of December, right in between Thanksgiving and Christmas, when it's cold, it's snowy, it's dark, this is the month where Anyone who's selling during this time, they're selling because they have to sell, right? Maybe they've got a job change. Maybe they need a bigger home or a smaller home. They have to move because they're having, they're having a baby or something. Maybe they just got married. Maybe they just got divorced. Maybe there was a death in the family. It doesn't matter, necessarily what the reason is, but people who are moving during that time generally are doing so because they have a reason to, not just because they want to, because, they feel like it's a good time, right? So December is historically the best month to be searching for a home if you're a buyer. And I'd actually consider doing that right now, right? Taking a look at interest rates. Rates are in a pretty good spot compared to where they've been, at least over the last couple months. So if you've been sitting on the sidelines for the last couple months, now might be a good time to kind of think about jumping into the market. If you want to take a gamble and see if they come back down here to the 6.5% range, like we saw in April of last year, then go ahead and do that. Just be aware that home prices might start to climb just a little bit, or at least the competitiveness on homes might climb going into February, March, and April of this next year, which is roughly, 2, 3, 4 months away. So jumping back to the data we saw here, February 2023, we're at 91%, 92, 94. You can see it steadily climbs here, and then it's been 96, 95, and then it actually started to come back down, right? 93, 91, 93, 93. And again, this is in correlation to rising interest rates during that time. September, we saw 91%. This is when the market was in a really tough spot. There was a lot of uncertainty with what was happening with inflation and the economy. And we saw, big negotiation going on these luxury homes during that time. 93%, 93%, and 91% here in December. So far, days on market is still very strong. We are sitting a little bit higher, let's say roughly between 4 and 7 weeks on average for homes in this price range, which is to be expected for these higher priced homes. There's just less buyers in the market for these types of homes. All right, so we're going to jump back here and we're going to take a look at what happens between $500,000 and $1 million. Taking a look at this, you can see that this is a little bit stronger than what we saw in the luxury market, but not quite as strong as what happened between under $500,000 as a list price. Again, looking at this, January 94%, even November and December 93, 94, 94. This is again the strongest time to purchase a home if you're looking in this price range. The data will remain true. Even 96% here in December. I expect that we'll probably stay around that 96 to 95% range for at least the next through January, let's say. January, 94, 95, 95, 96, 96. You can see it climbs up and then it started to fall again here in these last couple of months. 96% in September is the same. We're starting to see a lot more resistance here in this market between $500,000 and $1 million. The reason why is that anybody who's under $500,000 looking for a home, typically that's going to be in the buyer pool where there's the most amount of buyers, right? There's lots of people looking because that's where most of the people make, an average median wage here in the United States, which might be $50,000, $60,000, $70,000, $80,000, and those are the types of homes people can afford, especially if they're a first-time home buyer and maybe don't have a whole lot of money saved up for a down payment. Anybody who's looking above $1 million typically is in a very good situation, right? They're making more money. They're not as subject to interest rates and the changes we've seen there. They're probably a second, third, fourth-time buyer, or they've just got money. They've got assets. They've got money. They can purchase, put a huge amount down and not be affected by the interest rates as much, or maybe they're even paying cash like we just talked about earlier on in the video. So, the luxury market, anything above $1 million is not getting hit as hard as we would expect to see. Because there's still a lot of strength in the market and the economy, there's still a lot of buyers in that range. Talking about what's happening between $500,000 and $1 million, this is really kind of where the market's getting squeezed, especially in that $700,000 to $900,000 range if we narrow it down even a little bit more. Right here, this is a tough spot because you've got a lot of people who want to purchase a $700,000 home because that's what they feel like they need for their family of 4, their family of 5, or maybe even just a couple who wants a nicer, bigger home. However, it does get very expensive, right? If we pull up that mortgage calculator again, so if we pull this mortgage calculator up, let's say that you've got, $100,000 and you want to buy a $600,000 home. If you're looking at a 7%, let's just do 7% interest rate, you're looking at a $4,000 payment, right? If we include taxes and fees in there, so this changes a little bit. Home price, $750,000, right? If you're looking at a home price of $750,000, you've got $100,000 to put down. Which is roughly 13%, 7% interest rate. Property taxes on a home like this is going to be about $3,500. Insurance will be about $1,300 probably. And then you are going to have PMI on that property as well. So to buy a $750,000 home price with $100,000 down And, with taxes and insurance at the numbers that we're looking at, you're looking at a payment of $5,000 per month, right? That's a huge astronomical number that a lot of people just can't stomach. So the market between 700 to 900,000, I think, is getting hit the hardest. That's what I'm seeing out there in the market, just because it's such a tough range for people to be able to afford homes, because there's a lot of people who, they make pretty good money, but still stomaching a $5,000 a month mortgage payment is just incredibly difficult for a lot of people out there. So there's home sales that are happening. Homes are still selling in this price range, but they are getting hit a little bit harder. They're being negotiated on, and they're also sitting on the market for a relatively long time compared to homes at the higher price point. So that's kind of what's happening across the board. We're going to take a look at what's happening with new construction here in this video. So we're going to come back here to our market stats. We're going to go to year built, and we're going to look at homes that were built in 2023 or newer, right? So, well, I guess there couldn't really be anything newer. There's going to be some, random ones here in 2022. These are because homes were actually sold, even though they weren't actually built and finished yet, but just ignore that information right there. We're going to take a look at what's happening here, kind of starting in January, but mostly February as things started to ramp up. So you can see the number of home sales that happened in 2023 for new construction starts to ramp up. And you can see that home sales, even regardless of the price range, home sales for new construction have been remained very, very strong. So this is including all homes, condos, townhomes, new homes, affordable housing at the very low end and luxury housing at the high end. You can see here that if we take a look at these numbers, these percentages again, 97%. I think January is probably an outlier, 85%. That's a little bit low, but we've got 97, 96, 94. We've been hovering around this 97, 98% range. And that's not surprising because typically builders, when they list a home for sale, they say, here's what that number is. And they don't really budge off that. They might give you some credits. They might give you some concessions, but they're not going to really budge off that listing price very often. They do this because they really want to control the price in their neighborhood. If they're building out 20 homes, as soon as they give you a price drop of $20,000, that basically means they have to give every other person in that community a $20,000 price drop. Because if you're a smart buyer, you're working with a good agent, such as myself. Yes, I have to plug myself right there. If you're working with a good agent, they're going to go out there and they're going to say, well, hey, Ivory Homes or Edge Homes or Toll Brothers, you just sold this home to these other guys for $50,000 less than what you're trying to sell it to me for. Why would I pay $50,000 more, right? So the builder can get in a very tough spot during those situations, and they really are hesitant to drop prices because they don't want to have that snowball, right? If they've got 20 homes to sell in a particular month, quarter, or year, as soon as they give up $20,000 to one person, if you multiply that over the next 20 homes, that's a $400,000 price drop that they just had to take on all of those homes just because of that one price drop they offered. So builders are generally very resilient to offering these price drops across the board. Let's take a look at what's happening with inventory numbers. You hear a lot about what's happening with inventory and how the market is in such a tough spot because inventory is is really kind of at all-time lows, and there's not a lot of homes coming up for sale. So this is a very interesting graph here that we've got. You can see this is the number of active listings. So today we have 8,878 listings compared to 30 days ago. Listings are down, right? So we had 8,878 30 days ago, and we're at 9,600. 60 days ago, 9,600. 90 days ago, 9,200. So listings are down mostly because of the seasonality, because we're going into the winter months. There's less people who are looking to put homes under contract just because of interest rates and, being winter. There's less people who are listing their home for sale. Under contract properties, 3,850 compared to a month ago, 3,692. And 4,000 roughly 60 days ago. So this under contract number has remained mostly steady. We were down 4% compared to 60 days ago, but going back here to today, 3,851 home sales under contract at the moment. If we look at sold listings over the last 30 days, we had 2,268. Over the last 60 days, 4,897. So compared to the prior period, we had 22% sales number decrease right here. This shows you the list price to sales price ratio. We already talked about that information, so we're not going to look at that. But let's actually take a look at this sales supply versus demand over the last 48 months. So during COVID, you can see that things went crazy. The absorption rate basically went up substantially. And the months of supply of housing inventory was extremely low, right? We were under 1.0, which basically means that if no new listings came onto the market during that month, every single home that was listed for sale would be gone, right? It'd be sold. If there was no new listings, everything would be off the market. There'd be nothing to buy. That has since changed pretty drastically here through 2023. We now have roughly two months worth of inventory as of the beginning of the year. And right now we're sitting at roughly 4 months of inventory. So it would take 4 months for all of the homes that are currently listed for sale to go under contract and finally sell. So this gives you an idea of what the supply versus demand is in the market. Basically, this just reflects that there's not a lot of listings, but there's even fewer buyers who are willing to buy the listings that are out there, which again is congruent with the information we've talked about here in this video. All right, now we're going to jump into what's happening across the board. We're going to take a look at some different counties and take a look at home sales and see which counties are the strongest, which ones are seeing home prices go up or go down, and how quickly homes are selling in these different markets. So for the first one, I want to start with Davis County. We're going to come in here, let's search county right here. So if we pull up Davis County, we're going to take a look at the results here for Davis County. So if you're not familiar, let me actually just pull up a map. Davis counties include everything north of Salt Lake. So you can see this red line here. It's basically, there's a little mountain that comes out here on the north end of Salt Lake City and Salt Lake County. And then Davis County is going to be everything from North Salt Lake all the way up to about Clinton, West Point, Clearfield, and even South Weber here on the north end. This is all going to be considered Weber County up here. But for the sake of this, we're just looking at Davis County because I think this is actually kind of an underrated area. There's lots of people looking to move to this area. But if you've seen my other videos, you'll know that Davis County is typically a little bit more blue collar as opposed to white collar. So it's just kind of a different demographic, different type of people living here. That's not to say there's not white collar jobs in the area. You know, Farmington has a lot of tech companies and finance companies in the area, but just traditionally across the board, you know, we've got a lot of military here as well. This is a military base right here, Hill Air Force Base. And then there's also a lot of manufacturing. You can't quite see it on the map here, but this is all manufacturing in this area. So there's a lot of, you know, blue collar and military in the area. And then if you come down south, it's definitely more white collar. So it's kind of just a different market. You know, traditionally it's been a little bit cheaper to buy homes here. You can see that if we don't have any criteria based around prices, you can see that home prices are roughly around this $500,000 mark. So again, going back to the beginning of the year, $500,000 for list prices that did climb going through the spring and summer months, and then it's kind of fallen back down to this number again. So we were talking about some data earlier in the video about how home prices, according to Zillow, are expected to rise from July of this year through July of next year. I don't know that that's going to be true, right? In July of this year for Davis County, we saw home prices, you know, a list price of $525 with an actual sales price of $510. If home prices were to go up, you know, I think they said like roughly 6% was the number. If we go 510 times 6%, they're saying that home prices are going to go up roughly $30,000. So this 510 sales price would have to go up to 540. As of right now, home prices on a median basis are about $499 to $493 here in December. We've only had a couple of home sales as I'm filming this on December 7th. You know, but to see home prices go up 6% between now and July, I don't know. We'll have to wait and see. That's a pretty big jump. You know, that's over $50,000. That'd be almost, you know, 8 to 10% from today's numbers if we were to jump up that high. So I don't know that that's going to happen, but, you know, we'll wait and see. It depends on interest rates, really. Median sales price to original listing price, you can see here 97%, 98, 96, 95, 96. So we're kind of right in that mid 90 range over the last couple of months. So the market's still pretty strong here in this area. Let's come over here. We're going to take a look at what's happening in Salt Lake County. So we come over here, Salt Lake County. Let's pull up the results for this. Salt Lake County is going to be everything. Again, just to show you a quick map overview. I think this is helpful for people, especially if you're not from the area. Of course, if you live here, you're going to already know this information. But you know, Salt Lake County encompasses everything here in this area. You can't quite see it, but if we pull up the satellite image, you can see there's mountains here on the east side. This mountain comes out here on the west side, this one, or excuse me, towards the west side and continues this way. So there's basically a mountain range surrounding the entire Salt Lake Valley, which is actually pretty phenomenal, really, if you ask me. But that kind of encompasses Salt Lake County. So this is your main metro area where most of the growth is happening. You can see everything up to the mountain range is built here on the east side. There is still some land out here in Daybreak, Harriman, even Copperton. There's a big copper mine right here, and even out here in Oker, West Jordan, and even Kearns and Magna. There is still a lot of land out here waiting to be developed. So Salt Lake County, that's what that encompasses right there. Let's take a look at this. Salt Lake County is only slightly more expensive across the board compared to Davis County, but home prices here are much stronger, right? We do have more home sales that happen across the board, simply just because there's a higher population and there's more homes that exist in the area. But home prices are still very strong here in this area. You know, going back to early this year, 492, 495, 516, 492, 533. And we've been sitting in that low $500,000 range. So just slightly heavier or higher than what we saw in Davis County. I think this is primarily because there's a mixture, although there are more homes, there's actually a mixture of, there's more lower priced homes in Salt Lake County, believe it or not, compared to Davis County. Davis County is a, relatively newer area. There's newer homes up in that area. And that means that there's also higher priced homes. Traditionally, the newer homes that you've got here in the area are going to sell for a higher amount, just because they're bigger, they have more to offer, they're newer, and they're more desirable. So if you got newer homes, prices will typically be higher on that, and that will pull the median sales price up higher. Taking a look at this, this is the really important thing that you have to pay attention to here for Salt Lake. If you're looking at Salt Lake County, the market is stronger than what you're seeing in Davis County. The sales price to original listing price ratio, 96%, 97, 98, 97, 99, 97. We're sitting, 2 to 3% higher than what we saw in Davis County for the same exact search criteria. And also days on market, this last column right here is actually significantly lower as well. We're actually 1 to 2 weeks lower on days on market for Salt Lake County. Let's jump over here. We'll talk about, we'll modify the search. We're going to take a look at Utah County. Pull up Utah County right here. All right, so Utah County is kind of all over the place, right? Median sales price is actually lower. This is primarily because, although, I'm actually going to contradict myself a little bit here. There are newer homes in Utah County, but not all of them are bigger. There's actually a lot of single family townhome and condo communities that are popping up that are extremely affordable. Again, let's go back here to our map. Again, I know this is going to sound weird because I just contradicted myself, but typically those newer homes, if they're in desirable areas or areas that are less developable, are going to be higher priced, right? Davis County definitely has a lot of home areas where home prices are going to be higher. Farmington, Kaysville, Layton, these are areas that are typically a little bit higher in price, especially for newer homes, whereas Utah County, it does change a little bit, right? If we pull this up here, let's do the map of Utah County. So Utah County encompasses a very wide variety of, a very large area here. So this includes everything from Lehi here at the north end. You can see Lehi is listed right there, all the way down through Orem and Provo, including Spanish Fork, even down here to Santaquin and Payson. This is all considered Utah County. And then, of course, everything over here in Eagle Mountain and Saratoga Springs, these areas are growing like crazy as well. So because you have these areas where there's, cheaper housing because you're just further away from town, there's actually new homes that are going in here that are still relatively affordable for newer prices. And there's lots of condos and townhome communities as well, where I would say there's actually less of those up here in the northern counties. So Eagle Mountain, Saratoga Springs, even over here in Payson and Santaquin, lots of new homes going in. And because the land here is so cheap, because of the area, they're able to build homes for a cheaper cost. You can see just how much space there is, especially out here in Payson, in Benjamin, and Lakeshore. This is all basically just farmland. So yes, you can build houses out here. People have done that. You can see there's all these houses spread around. But eventually, guys, this is going to be developed. Spanish Fork, I mean, look at this. Everything basically east of I-15, extremely heavily developed, right? Everything over here, houses back to back to back, suburbs. As soon as you go on the other side of the freeway, it's just, it's basically just farmland, which is always pretty crazy. I mean, if you drive through, you'll think you're like driving down two different countries or something, because everything over here, entirely just farmland, and everything over here is built out. So still some farmland over here in Mapleton, but yeah, that's kind of an overview of what's happening there. Let's jump back to the stats and show you the strength of the market here. So home prices traditionally are a little bit lower here because there are more of those condos and townhomes selling that are going to be between roughly $325 to $475, and there's fewer higher priced homes as well because this is a newer area and not quite as desirable. Typically, a lot of these homes on the east side of Salt Lake County are going to be very, very expensive. We're talking like $700,000, $800,000, $900,000, even multi-millions. Whereas here in Utah County, there's just less of those homes. It's a little bit more middle class type homes. So this kind of drags the number down just a little bit. If you look across the board, home prices are considered cheaper here in Utah County, but the market is still very strong. Days on market is still pretty low, comparable to Salt Lake County, and home prices, as far as what they're selling for, based on what they're listed for, is still very strong as well. 98%, 97, 97, 100 right here, 98, 95, 97. So still pretty comparable. It does fluctuate month to month, so there are some changes there. But across the board, the market is still very, very strong in Utah County. All right, now let's take a look at what's happening in Summit County. We're going to take a look at Park City and the surrounding area. So for the last couple of months, Park City has seen pretty drastic variation here. Going back to the beginning of the year, we actually had a very strong winter, 97% sales price to list price in January and 96% in February. This is primarily because Park City obviously has great skiing and people want to purchase homes during the middle of the ski season so they can go out there and enjoy it. It's actually kind of opposite to what we see in Salt Lake and the other areas. March, we're at 95%, and then it actually starts to fall off after that. April, we're at 90% right here, 93, 93, 92, 91. We actually had a pretty strong October despite interest rates being high, right? If we come back here, October, we actually saw very high interest rates, but sales were actually quite strong in October. We only had one less sale compared to September of this year. And then August, we had 114. So sales were very strong through the fall months, especially in October, where we saw 97% sales price to list price. November, not so much, 91%. So far in December, we're actually looking very strong. 100%. This is because, again, we're going into that winter ski season and people want to purchase homes in this area for the ski season. So that's not surprising to see there. Now let's zoom out a little bit here and take a look at Washington County. So we're going to go down to the south end of the state. Let's take a look at this. Washington County is a little bit interesting. Right here, the price per square foot is pretty high. We have 272, 271, 264, 273. So for what you get for your money in Washington County, which encompasses St. George and Hurricane, Utah down at the south end of the state, home prices here are relatively expensive for what you get for your money, right? Take a look at this price per square foot. We'll come back to that and compare it to what we see in Salt Lake. Days on market here is still pretty high, and the market's been roughly, up and down a little bit. 95%, 97, 93, 97, 95. It's kind of all over the place, roughly in that 95% plus or minus 1 or 2 percentage points across the board. So Washington County still looking pretty good, but not amazing for the sales data. There's still lots of people buying second homes there and buying vacation homes, even retirement homes there. And the market's remained pretty strong there. So again, price per square foot, it is a little bit higher there compared to what you see usually within, let's actually just X this out. We're going to choose Salt Lake City, or Salt Lake County rather. Come on, here we go. And let's take a look at the price per square foot across the board for Salt Lake. I think it's almost comparable, right? Salt Lake is slightly cheaper. We're closer to like 250 to 240 even over the last couple months. So price per square foot in Salt Lake is cheaper than what you see in Washington County. Again, I think that's relative to the types of homes that you get there. Typically, there's newer homes there, and so they're going to be a little bit bigger, a little bit nicer, and they were built in recent years, which means that they're just going to cost a little bit more across the board. So very interesting information here. We covered a lot, guys. I want to talk really briefly about what's happening in the investment world with multifamily properties. Unfortunately, our system doesn't give us the ability to look at what's happening with multifamily properties from a sales statistics data. So we're going to kind of just touch on that here briefly based on what I'm seeing in the market. I track this information. I look at what's happening with new listings, what's happening with prices, what's happening with rents. And right now, honestly, guys, the real estate market for investing in Salt Lake is very, very difficult. If you're looking for duplexes, triplexes, or even fourplexes, the market is in a very tough spot. Home prices for those types of homes have not come down basically at all, right? Prices have not adjusted, even though interest rates have doubled over the last year or so. Those prices have really not adjusted all that much. We've seen them come down just slightly, but right now there's a lot of sellers who are just kind of in a position where they don't have to sell. And typically when they are selling these investment properties, they're selling them to people who have 1031 exchange money, who have to purchase something and have to make a decision on something relatively soon. And those people are willing to take a lower return just because they're getting the tax benefits along the way. So if you're just jumping into the market right now, the real estate investment game here in Utah, especially northern Utah, is very, very difficult. Even southern Utah, there's not a lot of investment properties that really make sense from a financial return standpoint. So if you want a good property, if you're looking for cash on cash return, if you're looking for just a solid investment that's going to appreciate and you're going to get some tax benefits along the way, yes, it makes sense. But if you're strictly looking to purchase a property, put 10 or 20% down and, cash flow $500, $1,000 a month, it's just not going to happen, right? On most every single property, unless you put $200,000, $300,000, $400,000 down, you're probably going to be like break even at best. So just, be aware of what's going on with the multifamily properties if you're interested in that market. If you are looking at that and you have questions, reach out to me. Or if you're looking to buy, sell, or invest in real estate, or even relocate here to the area, please reach out to me, guys. Call, text, or email anytime. I love hearing from you guys. If you made it this far in the video, thank you so much for being a supporter of the channel and this video. I know this is a long one, I want to wrap up with some final thoughts here on all of this information we covered here. We covered a lot in the video. Basically, what I want to outline is that, look, really nobody knows what's happening in the market. Nobody knows if the market's going to go up, if it's going to go down, if rates will go up, if rates will go down. Nobody really knows. Some people say up, some people say down. Here's my personal thoughts. I want you to take this information and make your own personal decision on this information so you can decide what makes the most sense for your own financial bottom line and for your family, right? Okay, so the first thing I want to share on this, like I mentioned earlier in the video, we've already seen interest rates come down about 0.5%. I do actually want to say that I could see interest rates coming down even further, especially if the federal government starts to cut interest rates going into 2024. There's rumors that the first one could actually come as early as March. I don't know. I think that's a little bit optimistic personally. I would expect it to be closer to May or June, just based on how things go. These things take time, right? I remember hearing people say earlier this year, oh, we're going to have interest rates getting cut by the end of 2023. And here we are halfway through December, and there's not even, a glimpse of an interest rate cut happening, at least for another couple months. So I don't think it's going to be in March. I think if something does happen, I think it could be closer to May, June, July, maybe middle of summer before that does actually happen. But that's not going to necessarily affect interest rates directly, right? Interest rates for houses are going to go up, they're going to go down, and they're based on different factors, right? They are kind of correlated to that federal government funds rate, but not directly. So what I think will actually happen with interest rates is they're going to fluctuate, right? They're going to go up a little bit. We're now at 6.5%, 6.6%. I think we could actually climb back up to 7% over the next couple months, or we could continue to fall, right? If things are looking good, if unemployment remains low, GDP and all of the economic factors are looking really strong, we could see interest rates come back down and maybe hit in the low 6% range, maybe even creep into the high 5% range. I don't expect that they'll go much lower than that unless we do see those rate cuts across the board. But really, honestly, guys, who knows at this point? Who knows what's going to happen? There's a lot of factors that really come into play here, and we can't always hit it right on. But that's kind of just my own personal prediction on what's going to happen. I actually think this is a pretty healthy range for interest rates to stay. I think if we stay somewhere between 6.5% to maybe 6% range, or even let's say like 5.5% to maybe upwards of 7%, I think that's actually a healthy range to stay in for at least the next couple months. Yes, it sucks. Yes, it makes things unaffordable, but I think overall for the economy, it's going to be the better bet. If we start cutting rates too soon, that's going to cause a lot of people to jump into the market. And yes, you're going to be able to get a lower interest rate, but now you're paying a higher price because as those buyers jump into the market, it then causes pressure on the homes that are listed, and those homes are going to sell, and they're going to sell for more money, and that could push prices up, especially as we go into the spring, right? Right now, things are a little bit depressed, things are a little bit slow and down, but you better believe by March, April, May, we're going to be starting to get in that spring rush, and things could climb pretty rapidly. So I think this is actually a healthy range. We don't want to go much higher than this, otherwise it just shuts down the housing market, drastically, like we saw back in September, October, and November. So I think actually being somewhere in like the 5.5% to 6.5% range would probably be the healthy range where we can get a fine balance between these things. So it's kind of give and take with that. Number two, I believe that home prices will stay mostly flat or maybe even climb a little bit. If we take a look, if you go back and look at the data that we talked about, home sales across the board have remained mostly flat. They've been up maybe 5, 10, 15 grand or down 10 to 15 grand month to month, but that's mostly flat across the board. That's not any drastic changes. We're talking 2 to 5% across the board, up or down. So I think for 2024, home prices are going to stay mostly flat. They might even climb a little bit, at least here in Utah. Hey, quick little note here, guys. I think that actually because we saw interest rates come down over the last couple of days, I think we could actually see prices climb at an even higher percentage now than I thought previously when I first initially recorded this video. I actually said that I think prices might remain flat. They might even climb a little bit going into the spring. Now I think there's a higher likelihood of that actually happening. I do think they'll probably stay flat for at least the next month or two because these changes take, a couple of months to really take effect in the market. Now that we've got these lower interest rates, people are going to be shopping throughout the next month, and that means that prices will stay mostly where they're at for at least the next 30 to 75 days, and then after that they could start climbing, and that also correlates with going into the spring months. So definitely by like March, April, May, I do think that we could see prices climbing, especially if rates stay at that 6.5% range or below that. There's a lot of pent-up demand on the sidelines, lots of buyers waiting to buy, lots of sellers waiting to list their home and buy something else, and we could see actually a lot of upward pressure on home prices going into spring if rates remain where they're at. They're always going to go up and down a little bit, but not, I don't expect any major moves. Number three, there's a lot of demand in the market. There's a lot of millennials out there. There's a lot of, there's some Gen Z individuals starting to enter the market. Despite what you're hearing, I'm starting to see younger individuals jump into the market. So yes, that is happening. There's also a lot of baby boomers who want or have second homes. They're purchasing third homes, maybe even fourth homes, right? It's kind of crazy. But a lot of the older generation, especially people who have had money in the stock market over the last 10, 20, 30 years, they've got lots of money. And frankly, they're looking to purchase real estate. There's people that need housing, and that's going to continue to drive demand in the market across the board. Lastly, there's more people relocating from less desirable areas to more desirable areas. Utah is one of those desirable areas where people want to live. The cat's out of the bag. This is a great place to live. We've got the 4 seasons. We've got great summers. We've got great skiing in the winter. There's great economics here. There's great job opportunities. Taxes are pretty favorable here. The landscape of politics and religion is pretty, straight across the board. A lot of people really appreciate what we have here. Of course, it's not going to be a fit for everybody, but across the board, we have lots of options here, and it's a great place for a lot of people to live. So number 4 on our list, I think just want to throw this note out there. Be careful of prices jumping up substantially if interest rates decline a lot, right? If we see interest rates come down to 6.5% or even 6% or even into the 5% range, you better believe that that home prices are going to jump up substantially. If rates come down 1 full percent, I expect that home prices will jump 5 to 10% within 1 to 3 months after that happening. So if we see a major decline in interest rates, be careful that home prices might jump up, especially as we go into the spring months. If we see that happen in March, April, May, if interest rates come down during that time, home prices are going to go bananas. People are going to jump into the market. They're going to be purchasing. They're going to think, oh, wow, interest rates were 8% a couple months ago. Now we're looking at 6% or high 5%. Now's the time to purchase, and that will put huge upward pressure on the market overall. And then lastly, buying or selling a home is still massively a personal decision. It depends on you and your family's position in life and what makes the most sense for you and your financial bottom line. When it comes to this, you really have to be careful about making a decision that works for you and your family. Maybe you're in a position where buying right now in December is the best option. Maybe buying in July, despite what happens with prices or interest rates during that time, is the best option. Maybe selling now or selling later is the best option. It totally depends. Everybody's in a different scenario. And if you want some information about what makes the most sense and maybe some guidance or advice on what I would do if I was in your position, I'll tell it to you straight, guys. I have people who reach out to me and say, hey, I'm looking at buying or I'm looking at selling. And I actually tell them, you probably shouldn't do that. You should probably just wait or hold on to that property or wait and see, wait until, you make more money at your career. I tell people how it is. And I tell people in a very transparent way what makes the most sense for them based on their situation. And I'd love to do the same for you. So the fact remains that people want to live here. People are going to continue to move here, and real estate is going to be desirable for years and years to come. So if you're looking at it from a long-term perspective, maybe that means that buying sooner than later makes the most sense. Maybe it means that not selling your property makes the most sense. It just totally depends on your individual situation. And I'd love to help you through that process. I want to be your trusted real estate resource of choice. Again, this is a super long video. Thank you so much for watching. If I can help you in any way, please reach out. Call, text, or email anytime. My information is here on the screen one last time, and you can find it in the description box below. Thank you so much for watching this video. We'll catch you guys in the next one. Don't forget to subscribe before you go, and we'll see you in the next one. Thanks.